Welcome. You're watching the India Development Debate. I'm Tamanna Inamdar. The RBI has cut interest rates by an unusual 35 basis points this time round and also lowered its GDP growth forecast to 6.9% from 7% earlier. Now, this is the fourth rate cut since the start of this year, and both a rate cut and a downward revision were largely expected, although the 35 bips figure is something new. The question is, though, is this enough? The RBI has made it clear that there are growth concerns, so will this 35 basis point cut do enough to revive the economy? Now that the RBI has done its bit, what can the Finance Ministry do about it? Now, we've been speaking to top experts on India Development Debate all this week when we talk about the economy, and today is no different. I have an absolutely smashing panel of speakers. Joining me today are Managing Director at Kota KMC, Nilesh Shah, Managing Director at State Bank of India, Dinesh Kumar Khara, and Jayesh Mehta, MD and Country Treasurer at Bank of America Merrill Lynch. Welcome to all of you, and thank you for joining us on the debate today. I hope you all will come up with all the points that we're talking about in terms of the broader messaging for the economy. And Mr. Khara, I want to start by asking you the basic premise we started with. The RBI has done its bit. What more is needed? And what is your reading into the messaging from the top bank today in terms of the state of the economy currently?
I think as far as the monetary policy is concerned, RBI has very clearly given a message in terms of what all needs to be done for strengthening the environment around, for ensuring a free flow of credit. And that is one of the reasons why when it comes to the LEF norms also, they have been relaxed for the NBFCs, and also the risk weight assets have also been calibrated to support NBFC lending. Apart from that, lending by banks through NBFC channel for promoting the priority sector lending also will go a long way in terms of supporting the availability of credit to people who really need that on the ground. So, I think it is a very major step in terms of revving up the demand piece and also to create enough enablers for the people who really need credit. I think very major steps have been taken, and it will certainly support the environment for supporting the economic activity.
Sure. Mr. Khara, very often, whenever we speak about rate cuts, the question arises about transmission. And this is where banks and lenders really come into question. And now I know the State Bank has already announced some extent of cut this evening by 15 bips, if I'm not mistaken. But do you think that the transmission problem overall, and I'm not talking about your specific bank, still exists?
Well, of course, I think it's one, of course, the policy is also an indication about what the central bank is thinking. The second very important part on the part of the bank, how they are looking at the particular risk. And of course, the policy rate is one of the determinant, but it is not the only determinant. We, in our endeavor to really promote the transmission, we have carried out certain steps, and we have, of course, immediately we have reduced our MCLR also by 15 basis point. And apart from that, we had introduced the repo link base home loans, which is one of the major product in the retail sub segment. And also apart from that, our CCOD rates also we had linked to the repo rate, and which ensures the immediate transmission. So that is something which has been done by us, and our thought was that many other banks will also perhaps join in probably benchmarking their interest rates to the repo link. But yes, of course, I would also acknowledge the fact that a repo link is only one of the benchmark.
Yeah.
Apart from this, there are other components also which really forms the very integral part for the interest rate structure for any bank.
Okay, Nilesh Shah, let me come to you. Markets didn't seem too impressed with the cuts today, and we'll leave that aside. But Mr. Shah, there also seemed to be an acknowledgement by the RBI that demand is an issue. Now, rate cuts can go only so far in boosting demand. Do you think that a lot more needs to be done on the demand side? And can you tell us your thoughts about how you see the entire picture right now?
I think there is a need for more heavy lifting to revive economic growth from 5.8%, which we saw in the month of March 2019. We need to prioritize growth over everything else. Inflation, fiscal, both are important, but growth needs to be prioritized because higher growth will result into better tax collection, which will eventually control fiscal deficit permanently. Higher growth will create additional supply, which will eventually bring prices down and control inflation. Today, in our endeavor to focus on inflation and fiscal situation, somewhere growth has been given lesser priority. The second thing is that for growth you require capital. Our savings rate has fallen from 38% in 2008 to 30% in 2019. We must accept the fact that our domestic saving is not good enough to give the growth which we are aspiring for. We need to open up for foreigners' capital or global capital. And there's no other day better than today when $14 trillion worth of foreign debt, it is at negative real interest rates. The capital needs to be respected and they require policy predictability, ever-changing taxation rules, KYC requirements do create irritation for the FPIs. So we need to raise global capital, we need to respect capital. The domestic capital cannot leave India, but they also need respect for entering into capital markets. LTCG was levied despite STT. Minimum public shareholding norm creates supplies without creating demand. Tax surcharge again creates pressure. Multiple level of taxation on corporate profit, dividend distribution tax on dividend income if it's above 10 lakh rupee. This all creates disrespect for capital which does not come handy for creating growth. The third thing is encouragement for entrepreneurship. Today, the management guidance which has come for June 2019 quarterly results, the companies which have given bad results are not seeing good future. Companies which have given good results, they are also not seeing good future.
Yes.
So clearly there is a need for heavy lifting in terms of encouraging entrepreneurship, respecting global and domestic capital, and giving priority to growth over everything else so that we can come out of this subdued phase of growth.
But Mr. Shah, may I ask you, heavy lifting from where? I'm reading between the lines from what you said, but the sense I got is that you're hoping, or you were hoping for a larger rate cut from the RBI, and now you're saying that the government needs to create more policy predictability. This sudden overnight taxes which impact, say, a section of investors like FPI will not do if you want more investment to come in. Am I understanding you correctly? Because I want to make this simple for everyone watching right now.
So I just want to illustrate through an example. In 2012, there was an order to remove energy-saving plastic films from all the automobiles as it was illegal under the Motor Vehicles Act. Now, the intention here was to stop crimes which can occur in a car or automobile with dark films, non-transparency. But what did we ended up creating as unintended consequences? The car owners, and there were 1.5 crore car owners who lost about 30,000 crore as their investment in films become wasted. They are paying 7,000 crore a year in increased burden on fuel because now without energy saving transparent films, your AC load increases. Manufacturers of films lost businesses and become NPS. Mechanics lost job or revenue. And the problem related to crime continued to remain. So somewhere we need to create policies not only at the government level or at the regulator level, but also involving other players from judiciary to consumer to entrepreneur, where we all give priority to growth. We have good intentions, but it needs to be backed by good execution, so that we don't end up creating a situation where good intention of stopping crime end up creating huge cost for the consumers.
Yeah, very interesting example there. I want to bring Jayesh Mehta in. Into the conversation we're having right now. So the RBI governor today said that the slowdown he sees is cyclical and not structural. Let me come back to the basic question that I began the show with. Fourth cut this calendar year, a total of 110 basis points from January 2019. Do you think enough heavy lifting been done from Mint Street, or there is more that can be done? Will this 35 bips revive the economy or move towards reviving the economy, Mr. Mehta?
So I think, I think it's very difficult to be precise and summarize the way Nilesh Bhai did it. I think he did address the macro thing. I think we need to definitely address capital, but since you asked me something different, I think market's been little bit, 35 basis point. It was more than 25, what consensus accepted. While we look at 110 basis point, we also have to look at it last year in second half. We did raise 50 basis point rate, whereas the world was living in a different trajectory. We did raise when the oil price went up, we did raise 50 basis point rate higher. So that's number one. Number two, at this juncture, we have to purely focus on growth, and I do understand that rate is not the only thing which is going to get you new capex and new capital or to revive the growth, but it is one of the enabling factor. While the other factors are being put in, lower interest rate definitely is one of the large factor. Transmission again is a big challenge, and that's where we come back to the liquidity framework. I think we still await next 2-3 days, as Governor said today. We will actually know what is the liquidity framework. Are we going to see surplus, or is this a frictional surplus where government has been spending, and that's why we are seeing this 2 lakh crore surplus, but that can be temporary. So for banks to really move out, they should see that surplus liquidity. I'm not saying we need 2 lakh crore surplus, even 20,000 crore surplus, as long as it is surplus liquidity, that's when the banks will reduce deposit rates dramatically. At this juncture, we are seeing banks reducing deposit rate nominally. Of course, they have reduced over a period of time nominally because of the shortage we have come out from. Yet the full assurance is not there that the liquidity will be permanently surplus, at least for the near future will be on a surplus side, and therefore the challenge remains to reduce the deposit rate, and therefore the challenge remains to transmit on the lending side of it. So I think it's the whole picture together. But yes, it's not only the monetary policy which needs, we need a lot of other things, but monetary policy can become a starter as inflation is fully under control. We don't have to worry about it, and we have to also look at what is happening in the world. Like today in Asia, we had 3 banks, 25 basis point expected in down south. Australia, it did 50 on a base of 150 basis point. And same thing in Thailand, where there was 0 or 15 basis point expectation, did 25 basis point rate cut in Thailand too. So I think the whole world over last few months has been really into cutting cycle, and we could have been more aggressive. Okay. Or maybe, hopefully, we have the policy coming next in next 2 months.
Yeah, I mean, perhaps, as you said, Mr. Mehta, that there is a little headroom over there, which the RBI governor has, kept for the policies coming forward. That seems to be the trajectory. Let me just play out for you what Shaktikanta Das, the governor of the Reserve Bank of India, said today on the slowdown. And this is an important one, where he describes the slowdown we're seeing as a cyclical one and not a structural one.
There is a demand and investment slowdown, both put together as, are having a sort of a dampening effect on the growth. We have ourselves reduced our growth projection now to 6.9% with risks slightly to the downside. Our understanding is that at this point, it is perhaps a cyclical slowdown, not really a deep structural slowdown, but nonetheless we have to recognize that there is room for certain structural reforms which need to be undertaken. But at this point of time, it would appear that it is a cyclical slowdown, and we are still working on it. I think the conclusions, it would be sort of, I mentioned it a little prematurely, but this is our understanding at this point of time.
So right now it's looking like a cyclical slowdown, not a structural one. Let me get more views in on this. Nilesh, let me start with you. What is your reading of the kind of drop we're seeing in demand? Which also leads me to, where I want to take this conversation forward. So we've established that just 35 bips is not enough. More needs to be done, maybe in further rate cuts in the future. The government needs to also come in. But what about the question of demand? Because if there is a drop in demand and a dampened appetite, then that is something which even rate cuts won't help with. In that context, do you also see this as a cyclical kind of a slowdown?
Undoubtedly, looking at our country, it is a cyclical slowdown rather than structural slowdown. There are multiple factors which has resulted into it, but there are some things which are good factors and some things which are bad factors. Earlier, to a great extent, our growth was driven by higher NPAs in banking system. Today, we have more transparent NPAs and better recovery rate. That slowdown is acceptable. Earlier, higher growth was possible with fiscal, imprudence. Today, we are fiscally more prudent, including off-budget borrowing. That slowdown is acceptable. Earlier, there were leakages in subsidy payouts and there was lesser tax compliance, and growth was visible because of poor tax compliance. Today, we have better tax compliance and lesser leakages in subsidies. That growth slowdown is acceptable because this is all creating better foundation. Earlier we had growth because of higher inflation. Today we have lesser growth because of lower inflation. That growth slowdown is acceptable. What is not acceptable in growth slowdown is where growth slowdown is coming from lack of respect for market. You are putting LTCG despite having STT. You are charging surcharge on FPIs. You are stopping settlement of a derivative transaction which involves multiple players. You are putting minimum public shareholding norms without creating, which puts about 3.75 lakh crore worth of supply in market without creating demand. Now all those things results into investor sentiments getting impacted. Similarly, you look at an entrepreneur of India. He is Kalyug's Abhimanyu. He not only fights Kauravs, which is the market and competition, but he also fights Pandav, which is lack of infrastructure, higher taxation burden, high real interest rate burden. Now we need to support our Pandavs, we need to encourage our Pandavs. A genuine business failure will have to be accepted. We have to trust our entrepreneurs. Yesterday I was in a board meeting in a company where I recognized and realized that if you are providing canteen facility to your workers and you don't do an audit for it, there is an imprisonment of 2 years. Now I can imagine imprisonment if I am not feeding my workers. But by feeding my workers, if I have to go to jail, then you can imagine that the cyclical slowdown can become structural slowdown.
I want Mr. Khara to respond to the points that Nilesh is making, because very important points there. Sometimes demand and economic growth becomes a function of sentiment as well, which may be difficult to put into data and figures. But do you think that makes a big difference, Mr. Khara?
Yeah, I think the kind of risk aversion which gets creeped into the system, essentially on account of the ecosystem, that is something which is a major determinant, and also is also one of the major factor which also perhaps influences the decision making in the system. But I think all said and done, today one very important aspect which has happened, there is a definite step taken by the RBI through the monetary policy when they have said that the LEF norms which are there for the NBFCs, they are willing to relax. When they have said that when it comes to RWA for the consumer lending, they are willing to relax those norms. So, I think it is a very broad indicator which will perhaps go a long way in terms of giving enough elbow room for the banking system to support the NBFCs, which are going to be the last mile vehicle of financing. So, I think to that extent, of course, what you mentioned in terms of the various components which really create the climate for the risk aversion, that remains whatever it is, but nevertheless this kind of an enabling environment which has been created through the policy, I am quite hopeful that it will go a long way in terms of reviving the economy on the ground. With the good monsoon which we are hoping, we will be in a position to see the demand coming back in the rural centers, and also the rural economy revving up as far as the economic demand is concerned. That will go a long way in terms of supporting the demand across the economy.
Absolutely, festive demand, good monsoons are all factors which could turn the story to some extent. Mr. Mehta, as I want you to respond to the point Nilesh made, I also want to add one more perspective which is widely spoken about. When we try to dissect what we are seeing right now in the economy, and one point of view is that we're also seeing the impact of attempts to formalize the economy. Whether it's GST or whether it's bringing more of the informal sector into the net. And as a result, we are seeing some dampening in demand as the system grapples with the new norms. What are your views on, some of those observations that have been made?
So, I think that's very true. We are formalization because people need to get adjusted to it. While people getting adjusted to it, one more bigger thing which has happened is the credit scare, right? So, people are so cautious and over cautious right now on any credit. So, whether and the distinction between good, bad, or even slightly somewhat MSME kind of situation has become very difficult. I think this is all. I would say we are in a situation at this juncture, like if you really look at it last 4 years, one thing which we had to do was cleaning up the banks, but in that bargain, the banks, particularly the large banks bearing SBI, most of them or bearing few Indian banks, most of them actually stopped lending, right? And I think this kind of reduced the delivery channel to the MSME side of it. That, because of growth in the NBFC side was kind of filled up by NBFC, but even NBFCs in last 6-8 months are really struggling, whereas banks have still not come back, which was ideally we would expect the banks to come back to fill up that gap which they had created, which the NBFC has picked up, but that is still missing out. And I think that is somewhere we need to really see that, and I'm not saying that people reduce their credit standard, but people have to do that. And secondly, as you are moving to formalization, an MSME guy may not have a background of financials to support it, but there are of course other ways and other assets which can work out. And I think Indian banks were very good at it, but I think because since last 4 years they have really slowed that down big time. We need to get the banking system back to lending. One is of course through NBFCs, what RBI is enabled today, but I think more than that is also direct lending, which was really happening, which has kind of stopped in last 4 years dramatically. And I think that is where this whole credit delivery mechanism has kind of broken, and that's where you are seeing more defaults, more losses, and now you are seeing job losses. So when we see this job losses now, whether can we revive this very quickly, because at this juncture we are actually seeing job losses. People are not getting paid, a lot of people are not getting paid salaries, so that is the kind of situation we are now into. And I think we need to,
which is why cheaper
of course,
loans.
RBI did their bit by aiding the bank.
No, absolutely, Mr. Mehta, which is why will cheaper loans at this point or easier loans really help in the big picture. Nilesh, I'm going to give you the closing comments as we wrap this wonderful and very in-depth conversation with whether the focus, and you said the focus needs to be on growth and nothing else. Even as the focus is on growth, first, what do we do about demand? Does the whole process need to start from there?
So one, we have laid a very good foundation by becoming fiscally prudent, by controlling inflation and NPA, by plugging subsidy leakages, by improving tax compliance. Now we have also cleaned up real estate sector with regulations like RERA, and all this had a negative impact on growth, but it was worth bearing. Now the clear thinking which we have to do is to give priority to growth. Growth cannot happen without money, so keep appropriate liquidity, as Jayesh Bhai mentioned. Bring real interest rate burden on the entrepreneur lower, and ensure that there is transmission of credit from PSU banks and NBFCs especially. The third thing is to encourage entrepreneurship by respecting them, by trusting them. Today they are facing too many constraints in terms of land, labor, capital, infrastructure, multiple regulations, and so on and so forth. So how do we support our entrepreneurs? By trusting and respecting them. And finally, we have to respect capital market. Show them little respect, they'll mobilize capital. And more importantly, as citizens, we also have to contribute. I just want to make one final point before closure. In last 18 years, we have sent more money abroad for import of gold, silver, diamond, and pearls than what we have received by way of foreign direct investment. We are a poor country which is sending capital abroad and then hoping that the growth will occur. It's like a patient who is giving blood donation in a bad health and then blaming doctors that I am not recovering. We have to ensure that we don't remit capital abroad but retain in India and use that capital wisely for creating growth. Demand will automatically follow if growth is created.
Absolutely. Just one word from Mr. Khara on this point as well. How do you push demand at this point? And one function, of course, is you make it, you make credit cheaper, you make credit easier, you make it more available. But if you're in a situation like Mr. Mehta discussed, where you're losing jobs, then you're not confident to pick up new loans. So how do you make that change?
Well, of course, as mentioned by Honorable Governor, that it's a cyclical slowdown, and in a cyclical slowdown, somewhere we'll have to break into, and I think that was with that intention only when this NBFC aspect was covered today. That was with that intention in mind, and they being nearer to the ground, their ability to assess the customer, their ability to take the risk little more than what any other institution could have taken, that is much better as compared to many other players. So that is perhaps it is intended to be done through this mechanism, and effort is to really ensure that how to break this cyclical slowdown.
Okay, thank you so much to all of you. Of course, we're hoping the best as we see the steps taken to revive the economy. There has been a big step coming in from the Reserve Bank of India. Now it's over to the Finance Ministry for the follow-ups of what happens next. A lot of pointers right here on this panel, so we hope the right people are watching and taking note. Before we take a short break and end the show, I just want to play out what Anand Mahindra said today on the steps by the Reserve Bank of India.
The rate cuts necessary for revival have been put in place. Today we had another step taken by the RBI in that direction, and the future, in my opinion, looks brighter for NBFCs that have thus far been stressed. So I'm confident that the measures taken will bear fruit, creating greater liquidity for NBFCs, which ultimately will make its way into the hands of the consumer.
Yeah. Well, important words there coming from Anand Mahindra. We'll take a very short break, but don't go away. On the other side, it's our tribute, our ode to an orator par excellence, a politician who has set such high standards of probity in public life. Today, as the nation remembers Sushma Swaraj, we will bring you the best of her speeches, something which really made her stand out as a public figure. Do stay tuned.